10 things you should know about money before age 30. Certain milestones are expected of us when approaching age 30. For some, it is getting married and starting a family. For others, it is acquiring certain financial properties and meeting up to a certain standard of living, all of which are good. However, these milestones can only be reached easily when we have our finances properly settled and secured to a large extent at least. In this video, we will be sharing with you 10 things you should know about money before age 30. If you're new here, consider subscribing so you won't miss other interesting videos like this. Number 1. You need financial education. Our level of financial freedom is dependent on the quality and quantity of information we have about money. Simply put, our state of finance reflects how knowledgeable we are when it comes to matters of finance. Making money is one thing. Saving it, managing it, and making it grow is an entirely different thing. And like it or not, financial management and our ability to make sound financial decisions from our loan rates and approval, rent and mortgage applications, and even your job prospects, in some cases, are all important to achieving our financial freedom or goals. Taking the time to know more about personal finance, everything to do with managing your money and saving and investing, budgeting, banking, insurance, mortgage, investments, retirement planning, tax planning, and estate planning will put you on a great start to achieving your financial goals. Learning about entrepreneurship and investing can also be some of your best decisions at your 20s. In all, the more you know about money, the better you'll be financially. Number 2. You can't be rich spending all you earn. Most adults simply work, earn, and spend. Some people complain that they are not earning enough. But even when their income increases, their expenses increase as well because they are materialistic. You can't be rich spending all you earn. As stated earlier, making a budget, especially one that doesn't involve spending your whole paycheck and anticipating the end of the month to get another, and learning how to stick to it is paramount to your financial freedom. And the importance and role of saving in this cannot be overemphasized. According to T. Harv Eker, author of The Secrets of the Millionaire Mind, one of the secrets to managing money is creating a balance. You can start by living off of 90% of your income while putting the remaining 10% into your retirement savings. Gradually increase your savings and investment percentage to 20 to 40%. While you decrease the amount you live by. Number 3. You need emergency funds. Sorry, the unexpected happens. Aside from creating a solid savings investment account, you might also want to create solid cash savings for emergency. You see, although we all want life to be perfect, but oftentimes than not, life doesn't pan out this way. And there is no predicting what and when a thing can go wrong. When these things go wrong, it most of the time require money to fix it. For instance, your car might break down or you might sometimes fall under the weather and require some medical attention. This is where your emergency funds come to play. Hence the need to plan a non-retirement savings account. To do this, you can start by splitting your paychecks into 4 parts. One portion for your basic needs, one portion for lifestyle expenses, one portion for investment or retirement savings, and the last one portion for cash emergency funds. Number 4. You must have financial goals and be willing to commit to it. Research has shown that those who plan for the future end up with more wealth than those who do not. So, once you've educated yourself about your personal finance, it's time to set goals and plan how best to manage your finance. If you do not have a clear plan, how on earth will you achieve any of the many things you plan to? To do this, you have to write down these goals and make a budget. Devising a budget helps you live and spend within your means and save enough to meet your long-term goals. Also, to enable you meet these long-term goals, start by setting short-term goals and creating concrete plans for achieving these goals. For instance, if your long-term goal is to become a property owner, start by making research on how much it will cost to acquire one. Then calculate how much it will require you to save from your current earnings to achieve that goal. Write it down and start saving towards it. Don't just expect things to happen. Plan, set goals, and have a long-term perspective on your finances. Number 5. Be willing to take calculated financial risk. Learning to take calculated risk is learning to position ourselves for better available opportunities, like taking a new and better job in a different city, starting a new company or business, going back to school for additional and professional training regarding a particular field, and others. You might make mistakes, but mistakes end up serving as lessons for us to learn from and grow. Moreover, as you age with more responsibilities, the tendency to want to play it safe is high, limiting your ability to take these risks. So now that you are young, go for your dream. Number 6. Take care of your debt problem. What can be worse than living your whole life paying debts? Yet, that's how most adults live. Of course, we all borrow money from time to time to probably accumulate some assets or for investment purposes. However, to avoid getting stuck in debts and spending the rest of your life paying off these debts, avoid spending more than you earn. Material things don't give us as much happiness as we think. If you can't afford 5 of anything, you can't afford 1 of it. Stop looking at the cars, phone, or clothes other people use. You are not them. You are you. 7. Take advantage of employee benefits. While your paycheck is the most important thing you get in exchange for your time, energy, and hard work, it isn't the only thing you get. There are quite a number of incentives and benefits that do not even come in monetary form, but will help cut off additional expenses in your finance. For instance, healthcare benefits, gym membership, meals, and the likes. Leaving to lie on the table is like leaving your money to the wind to play with. 8. Cut down on needless expenses and keep a modest lifestyle. Do you know that the big purchases do not necessarily break down your budget, but the little ones that eventually add up? For instance, rather than take your coffee from the office, you go to a coffee shop instead. Rather than spending so much on buying food every day, start buying your own foodstuffs and make efforts to prepare them yourself. Well, perhaps you can afford to purchase these things, but creating this standard of living that has you consistently paying for every service that you can easily carry out on your own will leave you spending your whole paycheck and have you living in anticipation of the next. When this keeps happening, fulfilling your financial goals remains nothing but a dream, not a reality. Number 9. Diversify your income. If you intend to be proactive about your savings and financial freedom, then you should consider diversifying your income. You can explore as many options as possible and stick to the one or the ones that earns you enough income to help you achieve your goals. Number 10. You don't need an expensive wedding. A big wedding might be your dream, but before you spend your entire savings purchasing a ring or inviting your entire family and friends to grace the solemnization of you and your spouse, remind yourself that a few years down the line, you as well as everyone that showed up for your day might probably not remember that day anymore. So, why waste so much money when there is no high return on investment (ROI) attached to the ceremony? In summary, financial freedom rarely happens by accident. Those who become financially free at their 40s and 50s usually plan meticulously for their financial future right from their 20s. Don't spend all you earn. Beware of debts. Cultivate saving habits. Be willing to take calculated risk. Plan and budget. Thank you for watching our videos. We'd like to give you another interesting video for you to enjoy next. But before then, our team will be very happy if you can like this video and share it with your friends on social media. If you're new here, don't forget to subscribe so you won't miss other interesting videos like this. Look at your screen now to see 2 other videos we handpicked for you to enjoy next. We love you.